Hello and welcome. Today, we're digging into Takeda's latest earnings call. And let me tell you, this is a big one. It's not just another quarterly report. We're looking at what could be a defining pivot year for the company. We're going to break down the numbers, their big strategic moves, and what it all means going forward.
So here's the game plan. We'll start with the top-line results, then get into the weeds of the pressures Takeda's facing. After that, we'll look at their massive $11 billion bet on cancer drugs, map out what's coming next, and wrap it all up with our official rating. All right, let's dive in.
Okay, first up, the quarter at a glance. Let's see how Takeda actually did, and maybe more importantly, how Wall Street took the news. And right off the bat, you can see the main story here. Revenue came in at about $7.3 billion, which was a pretty big miss against what analysts were expecting. They were looking for something closer to $8 billion. But, and this is the interesting part, they managed to hit their earnings per share target perfectly, right at around 44 cents. So the big question is, how did they pull that off? How do you protect profits when sales are taking a hit?
Well, the market knew exactly what it was focused on, that revenue miss. The stock dropped almost 4% on the day of the announcement, and that reaction really sets the stage for everything else we're going to talk about. A company that's managing its costs incredibly well, but is definitely feeling some serious pressure on the top line.
So, that leads us right into our next section, where we're going to break down exactly what's putting the squeeze on Takeda's income statement.
This slide really tells the entire story of the quarter. It's a tale of two forces. On one side, you have these huge headwinds. The patent on their blockbuster ADHD drug Vyvanse just expired, and currency fluctuations are not helping. But on the other side, management is fighting back with some powerful tools, really tight cost controls, and just fantastic cash flow.
And to give you a sense of scale on that main headwind, the Vyvanse patent cliff single-handedly wiped out about 100 billion yen in revenue. That's just in the first half of the year. That is a massive, massive hole to fill for any company.
But then you see this. This is the counterpunch. Despite that revenue hit, Takeda grew its adjusted free cash flow by an incredible 112% year over year. This is exactly how they hit that earnings number. It's a masterclass in operational discipline.
And just for a quick refresher, that term we're using, loss of exclusivity or LOE, is absolutely key here. It's the moment a drug's patent dies, and suddenly a flood of cheaper generic versions can hit the market. And when that happens, sales for the original branded drug almost always fall off a cliff. That is the storm Takeda is navigating right now.
So, it's no surprise that management had to lower their expectations for the full year. They're now guiding to broadly flat revenue, with profit and earnings likely seeing a small decline. But look at that last bullet point. The dividend is unchanged. That's management sending a pretty strong signal, right? They're telling investors that even with these near-term bumps, they are confident in their ability to generate cash over the long haul.
So that brings us to the long-term plan. How does Takeda actually grow again after the Vyvanse cliff? Well, the answer seems to be a huge pivot into oncology, and they're doing it by looking outside their own labs.
And at the heart of this strategy is a brand new partnership with a company called Innovent. The total potential value of this deal? A staggering $11.4 billion. This is not a small acquisition. This is a company-altering bet designed to completely restock their pipeline for the years ahead.
So what did they get for all that money? Well, it's three really promising assets. You've got IBI-363, a new kind of immuno-oncology drug. Then there's IBI-343, a next-gen antibody-drug conjugate. You can think of these as basically guided missiles that deliver chemo directly to cancer cells. And third, they've got an option on another novel drug. The message here is clear. They're buying their next wave of growth, not building it from scratch.
And management isn't being shy about the timeline here. Takeda's head of global oncology, Teresa Bedetti, said it herself. This deal is about finding significant growth drivers post-2030. They are absolutely playing the long game, looking far beyond the current patent issues.
Okay, so with that long-term vision in place, what are the things that we, as investors, should be watching for in the more immediate future? Let's pull up the catalyst map.
All right, here's your roadmap. In the back half of this fiscal year, keep an eye out for regulatory filings for two drugs, rusfertide and oveporexton. Then, by the end of calendar 2025, we should get some really important Phase 3 data for a psoriasis drug. And after that, fiscal 26 and beyond, that's when the Innovent deal really starts to show its cards. All right, let's bring it all home. We've looked at the quarter, the headwinds, the strategy. Now it's time to put it all together and make a call on where this stock is headed.
So after weighing all the evidence, the short-term pain versus that long-term plan, what's the final verdict? Are we looking at an outperform, a market perform, or an underperform?
We're rating Takeda a market perform, and the logic is pretty straightforward. Look, while that long-term oncology pivot is really exciting, you just can't ignore the headwinds they're flying into right now. The Vyvanse cliff is real, and currency volatility is a problem. We think those factors are going to keep a lid on the stock price until Takeda can start delivering some concrete wins from its new pipeline.
And that leads us to our trade idea, something we're calling the pivot hedge. Here's the play. You go long Takeda because you believe in their best-in-class cash flow and that huge oncology bet they're making for the future. But at the same time, you go short a basket of their competitors, other pharma companies facing similar patent cliffs, but who don't have Takeda's cash generation and haven't been as aggressive in reloading their own pipelines. It's basically a bet that Takeda is navigating this tough environment better than its peers.
And that's our take. But as always, we have to remind you that this analysis is for informational purposes only. It is not financial advice. Please be sure to consult with a professional before making any investment decisions.